I got a question to ask you really quick. Don't you wish there was a loan program out there that was 100% financing, zero money down? Don't you wish that you could get help with closing costs when purchasing a home? What's going on, guys? My name is Minh with What's a Mortgage. Welcome to our channel. The goal of our channel is to educate, empower, and connect you with the right mortgage. Guys, if it's your first time, please hit the notification or subscribe button so you get notified every time we post a new video or go live. If you are looking to purchase a home, definitely follow us. If you know someone who is going to purchase a home, please share this page with them. If we bring you any value in this video, please hit the like button. It helps drive our feed on the algorithm, which helps out. Our goal is to spread the word, spread the education. So thank you guys for joining us. Tonight, guys, we're going to talk about Cal HFA, California Housing Finance Agency, California most popular down payment assistance program. There's down payment assistance programs in every state. Today we're going to talk about California. If you're watching this video and you're not from California and you do have a loan program that you want us to explain to you, please message us directly. If you follow our ultimate mortgage guide, the 4 keys to unlock a mortgage, as long as you follow the identity, credit, income, DTI, it will help you qualify for any loan program. To find out more about our guide, go to our website, whatsamortgage.com, and download the ultimate mortgage guide. The first half of the book is the 4 keys to unlock a mortgage. So before I get into Cal HFA, let me tell you a story about my friend James. James is a great guy. James pays all his bills on time. James is a great husband, a great parent, a great friend, but so far, James can't catch a break. James can't save money for his down payment or his closing costs. Life happens. Bills happen. Crazy is like every time you start saving money, your car breaks down. There's always some emergency where you have to use the money. Does that story sound familiar to you? If that story sounds familiar to you, FHA is going to answer the wishes that you have, right? Down payment, closing costs. So you and James, that hopefully you're a James as well, this might fit the perfect scenario for you. Welcome to Cal HFA, 100% financing, zero money down to purchase a home. But before we get into that, when you're buying a home 100% financing, no matter where you are in the United States, there's going to be a 100% financing program. With VAs, there's 100% financing. But remember, when you buy a house, you have to put a deposit down. Let's say it is 100% financing. It's going to help you cover your down payment and most of your closing costs. You're still going to come in with at least 1% of the purchase price, or a lot of times if you budget right with the seller, you're able to get the money back, okay? Don't think, oh man, God, this is not 100% financing. I had to come in with money. No one's going to take the house off the market unless you put a deposit. So if you're out there and you want to buy a house, you got to be realistic. Also, with Cal HFA, just remember, it is a loan. In the state of California, is a loan, not a bond. So I mean, it's a loan, not a grant. The difference between a grant and a loan is a lot of programs out there that are grants, the interest rate is a lot higher because they're giving you the down payment. Because their loan, Cal HFA is loaning you the down payment, the interest rates are a lot lower, but it's a loan, not a grant. With the grant, they're going to give you a higher rate, and you have to keep the loan for a certain period of time so they can make their money back for their down payment. And if they help you with closing costs as well, of course, you don't have to pay the money back, but they made it on you in the first 3 to 5 years, okay? So Cal HFA, California's 100% financing down payment program, okay? So this is how it works. It's for first-time home buyers, which means you can't own a home for the past 3 years. It's 100% financing. You have zero money down for the down payment. They're helping you with the down payment. And it's broken down into 2 versions, 3 levels. Most down payment assistance programs have the same thing. There's always going to be a conventional version and there's an FHA version. The FHA version is a lot more flexible than the conventional version, and we'll go through that in a second. There's 3 levels of each version. There's the no zip, the 2-zip, and the 3-zip. So normally when you buy a home, there's the down payment and there's closing costs. So Cal HFA will loan you the down payment. That would be the no zip. But then you can borrow the closing costs as well, which is 2% or 3%. Normally, closing costs is between 4 to 4.5%. That's why we recommend you bring in 1%. at least of the purchase price. If you're closing close to October, November, December, you might need an extra 0.5% because the taxes are due in November and they're due in April. So they collect taxes. So that's why it could be a little bit more expensive closing during that time. So definitely, guys, when you're purchasing, just know that it's the Cal HFA is helping you with the down payment, and it can help you with closing costs as well. But yes, the down payment is there. Yes, they're helping you with closing costs. Yes, you still have to bring in at least 1% as a deposit. But of course, you can work it out different ways where the seller can give you the credit back if you need the money. But I do recommend you have some skin in the game when you're purchasing a home. So also remember, with these programs, make sure you're working with the right lender to budget out closing costs. Also, the closing cost is a little bit higher than on regular loans. The reason why, the incentive that would normally go to the bank for giving you the loan is going towards your down payment and your closing costs. That's why the fees are a little higher, because the lenders have to charge up front. But remember, Cal HFA is helping out with the closing costs. You're just coming in with 1 to 1.5%. So definitely talk to a lender about closing costs on these loans. Make sure you're not working with the rookie. The reason why, the last thing you want to do is not have enough money to close and not budget enough. So here's the loan breakdown, right? So when you get the loan, right, like I said, there's 3 levels of it. Level 1 is the first loan. So if you're going with a conventional Cal HFA, the first loan is going to be 97%. If you're going with the FHA, it's going to be 96.5%. The second loan, if you're going conventional, would be the 3% down. So let's say you bought a home in the high balance. Remember, it's 5% down, like LA County, Orange County. If you're going above the high balance loan limit, especially some counties have a higher balance, most counties don't. Remember, it's going to be 5% down if you go above the conventional loan limit. On the second level for FHA, it's always going to be 3.5%. So hopefully that follows you guys. So in the breakdown, if you're going to go with the conventional Cal HFA, it's the 97% loan and then the 3% down payment, or the 5%. With the FHA, it's 96.5, and then the 3.5 is going to be the second loan. So the third loan is going to be either a 2% zip or the 3% zip. If you're borrowing 2% zip, of course, the interest rate will be lower. If you're borrowing the 3% zip, the rate's just a little bit higher because you're borrowing 1% more, and we're going to go over that in a second. That's the breakdown of the Cal HFA loan. So there's 2 versions. There's a conventional version, there's an FHA version, and there's 3 levels. There's the main loan, there's the down payment, and there's a closing cost. Of course, when you send out your mortgage payment, just know it's only 1 payment, but it's all broken down because you also have taxes, insurance, your mortgage insurance, right? So definitely, guys, just understand that even though it's 3 different loans and you have tax insurance and your MI, it's 1 payment. So don't let it scare you up. Oh my God, I gotta mail 5 different places. No. You just mail it to 1 place. Unless you have HOA, of course, you pay your HOA separate. That's how those loans work. 2 different versions, and then there's 3 levels of it. Hopefully you understand the 3 levels. It's the main loan, the down payment, and then the closing costs. So we have that broken down right here for you on a conventional loan on a $300,000 with 3% down, right? So the $300,000, the $9,000, the new loan would be $291. So that would be the no zip, which means you're going to cover your own closing costs, or the seller's going to cover it. The strategy is, if you can get the home, and let's say you're writing up an offer on a house that's been on the market for a month, or you saw there was a price reduction, right? Instead of taking the lower price, I would go, hey, I want that money for closing costs. If you do that, you can do the no zip, which means you'll get the better interest rate. It's really hard to get right now because it's a seller's market. But yes, there are homes that do age, especially if you're dealing with in Fresno, Bakersfield, homes are sitting on the market a little bit longer, right? They're not moving as fast as Riverside or San Bernardino right now, or Kern County, right? So definitely, guys, make sure you understand that, yes, the no zip, people can get it. It's going to be the lower interest rate. We'll go over that in just 1 second. But when you do the no zip, you're either going to handle closing costs or the seller's going to handle closing costs. And here's the 2 zip. The 2 zip here is the purchase price, the down payment. They're loaning you 2% of the zip. So that means you still have to come in with 2% of your own money, or you can come in 1% and have the seller cover 1%. Like I said, closing costs is between 4 to 4.5. Definitely talk to a lender so you can go ahead and budget it correctly. If you're closing closer to September, October, November, it gets a little more pricier. If it's a higher purchase price, like 350, 400, 450, you might only need 4% still. So definitely talk to a lender. And then of course there's the 3-zip. It's the most popular program. You're only going to get 1%. That's why when you come in with 1%, you don't have to stress about the seller not helping you out with closing costs. So that's the conventional version. Let's check out the FHA version. So the FHA version, same thing. There's the down payment, right, which is 3.5% down. On FHA, there's still upfront MI. So it's the down payment and then add in the upfront MI. That's going to be your loan amount. And then, of course, with the 2-zip and the 3-zip, same thing. When you do the 2-zip, you need 2% to 2.5% more. So either you can come in with it or you can come in with 1.5%, 1%, have the seller. But the 2-zip, the rates can be better than the 3-zip. You need to strategize with your lender and with your realtor when you're doing down payment assistance. You cannot be working with rookies on these loans. The next is a 3-zip, same thing. Most popular program, right? You come in with 1 to 1.5. You don't have to worry about the seller not helping you. You need to understand the market, strategize with your lender, make sure the lender and the realtor are communicating to make sure that you're coming in with the right amount of money so you're not short to close last minute, or the seller is helping. If the home's sitting for a while, instead of asking for a price reduction, or you did see a price reduction, bump it back up to cover your closing costs. Hopefully you understand now how the Cal HFA loan works. Next step, we're going to talk about qualifying for Cal HFA. So remember, guys, the 4 keys to unlock a mortgage. If you don't understand the 4 keys to unlock a mortgage, you can go to whatsamortgage.com, download our ultimate mortgage guide. But for those of you who've been watching consistently, the first key is identity, right? Who are you? Remember, you have to be a United States citizen, a permanent resident. You came in on a work visa. As long as you came to the United States legally, you can purchase a home with a Cal HFA. First-time home buyers only. Remember, guys, you cannot own a home for the last 3 years. If you use a cosigner, that cosigner also cannot own a home for the last 3 years to help you qualify for home ownership. They're going to ask you for 3 years tax returns. They're not going to qualify the income on 3 years tax returns. They're only going to qualify the income on 2 years, but they're looking on 3 years to make sure you didn't write off any mortgage interest. Occupancy. Cal HFA is only for owner-occupied homes. They're letting you take advantage of this 100% financing, knowing that you are going to occupy the property. Like I said, all cosigners cannot own any property, right? Property types. You can't do two units, 3 units, or 4 units. This is just for single-family homes, condos, manufactured home, which you need a 660 credit score for manufactured. We'll go over credit score in just a second. Conventional condos, the condos have to be warrantable. If it's FHA, they have to be on the FHA approved website as well. So that's the type of identity that you have to understand when you're qualifying for Cal HFA. So now that we know identity, the next step is your credit. This is a question everybody asks. So let me get depth and deep and get in them guts on credit, okay? So with credit, like I said, on the conventional loans, they will follow conventional guidelines. On FHA loans, they will follow FHA guidelines. The only thing difference is that on FHA, I know FHA can go down to 580, even lower sometimes. The minimum credit score is 640. If you're in the 580s, close to 640s, as long as you don't have lates in the last 12 months, a lot of times you can clean up your credit to get to that 640, okay? So here's a tip for you. Conventional FHA. If your credit score ranges between 640 to 700, I would go with an FHA. The payment's gonna be cheaper. If you're gonna go from 700 and up, the conventional would be cheaper. If you're going conventional, 700 and up, right? Or I think 700 and up, right? Or 680 to 700. There's another version of the Cal HFA for conventional. It's a home ready version, which has the lower interest rate. But as long as you're in the income limit, if you make a certain dollar amount, we'll go over that in a second, then I would go conventional. So let me reiterate that. If you have 640 to 700, I would go FHA. Conventional, I would go 700 or above. Unless you fit in the home ready income limit, then I would go 680. But most people are doing the FHA. It's a lot easier to qualify. It's more flexible on credit. But remember, with FHA, if you default on student loans, you might not be able to go FHA, Cal HFA, because you have defaults. You would have to take it out of default, make monthly payments, or be in forbearance before you can qualify for the Cal HFA, FHA. The other route is to go conventional. But a lot of times, if you have late or if something went into a default, most likely people don't have good credit. The only time I see it working is that default came in you had that default a long time ago, and you just have to get it out of default, but your credit's good again. So make sure you understand that you might fit the requirements, but make sure you check those student loans. I always ask every What's a Mortgage people when they reach out about Cal HFA. These are the secret tips I would look at. You must have no lates in the last 12 months. You can't have any bankruptcies in the last 2 years. If you have a repo or you have any forbearances and all that, I would wait till after 2 years. They pretty much need a 2-year clean history. So now that we understand credit, the credit score you need to be at, next is income. The income limits are right here. So of course, if you want to buy and you need to know the income limits, they have a link, your income limits there. Everything I talked to you about is on their website, calhfa.gov. All I did was I just simplified it, made it easier for you. Yeah, and we will have this Cal HFA book to give out as well. If you would like the book, please reach out. We will send you these slides so you can see what it takes to qualify. After we know identity, after we know credit, after we know income now, the next step is your debt to income ratio. Because they're lending you the money, 100% financing, they help you with closing costs, the max debt to income ratio is 45%. That's total back end and front end. Your front end is your household debt. Your back end is your complete debt. So their max is 45. So we did a little breakdown here for you. So if you made the X amount, that would be your monthly times it by 45%. That's the max your mortgage payment and all your debt can add up to when you're qualifying for Cal HFA. They're a little bit stricter because a lot of guys are, it's 100% financing. It's going to cause a crash of the market. They are so strict when it comes to DTI. They're flexible because they follow FHA guidelines, right? But Cal HFA is not flexible when it comes to DTI. Because they're loaning you so much money with no risk, they want to make sure that they minimize the risk by minimizing the DTI. Those are the 4 keys to unlock Cal HFA, 100% financing, 0 money down for down payment to purchase a home. Hopefully these 4 keys will help you unlock home ownership for you. If you wish there was a program, your wish can come true. Here are the links to all the resources where we pull the information. If you would like help or you would like more, you have more questions, if you want to go over payments, please reach out to our staff, and our staff will be able to help go over payments with you so you understand. If you'd like a copy of the book, please go ahead and message us, and we will send you our Cal HFA book. If I brought you value tonight or I helped you answer the question, do me a favor. Hit the share button on this video so you can share this information with other people. Tag your friends in it if you know that they're going to be interested in this program. Also, don't forget to like. If you haven't followed me on Instagram yet, go to Instagram under What's a Mortgage. I want to end this with my attitude is gratitude. Without you, there would be no me. So thank you guys. Mad love to my WAM fam.